Okay, looks like it is live. So over the last 10 days, we've been getting some interesting stories out about the large Chinese state-owned enterprise, or SOE, banks. Now, I have been documenting about the unusual and very large bailouts that China has done for all of 2019, that were months before the pandemic, almost a year before the pandemic. A lot of the trouble in the Chinese economy started because the global economy was not functioning properly, because the global economy was already in a depression with a lot of the exporters. So there was the China Construction Bank, which is one of the two largest banks in mainland China, a Chinese state-owned enterprise bank. They were on the hook for a $300 billion bailout over, I think, 5 years for Hunan province. If you want to see more about all the different types of weird bailouts, take a look at the video I did in August of 2019 called China's Very Dangerous Fiat Currency and Credit Problem, where I document a lot of the different bailouts that the Chinese government and Chinese banks had to do for all of 2019, months before the pandemic started. But over the last 10 days, we've been getting more information out about how Chinese banks are having enormous losses, in some instances with bad loans, but also the profitable loans that they do have will now have to be sacrificed, according to China expert Michael Pettis. As you can see there on your screen, the tweet in the upper right, which I screenshotted and added to the collage. He has lived in mainland China for a long time. He's worked in the financial industry. I think he's also a finance or economics professor. I think a finance professor or business professor at one of the major universities in Beijing in the business school. I think it might be Peking University, which is very prestigious there. So he talks in that tweet from September 8th about how China's large state-owned enterprise banks have been told by the Chinese government to sacrifice $210 billion in profits to save their economy, to do bailouts, to prevent Chinese firms from failing. And I've gotten a lot of comments over the last 8 months about the other China stories I've done in the past, and they're like, well, why hasn't China collapsed? Well, China's economy is very complicated, and most people don't understand how the Chinese economy works. I mean, it's, for a lot of intents and purposes, it's a closed system. They do allow some foreign capital, foreign direct investments, and they do want commodities to be imported, but they do not want capital leaving the country. So they have a closed capital account. They have very strict capital controls, very draconian, that they try to add to every couple years, because Chinese citizens, when they want to move their savings out of the Chinese currency, and by the way, the Chinese currency is actually looking pretty good because it is well managed by the People's Bank of China and the Chinese government. It's at 6.838 Chinese yuan to the dollar. So even though there's a discrepancy here, so the Chinese state-run media, which is Chinese propaganda from the Chinese government, and also Western media, which is just repeating this, says that in the month of August, China had a massive increase in their foreign exchange reserves from positive global trade, that it went up to 3.1 something trillion dollars. So there was a big increase in foreign exchange reserves, but Joshua Phillip, who covers China extensively, and he has disclosed that he's getting documents directly from whistleblowers and insiders inside all different levels of the Chinese Communist Party, at all different levels, whether that's in Beijing or at the provincial level, local government officials. They're doing interviews on China in Focus and on Joshua Phillip's excellent China News reporting. And he disclosed last week on one of his news shows that an internal Chinese Communist Party document says that their reserves, their foreign exchange reserves, are dangerously low. Meanwhile, China has all these food problems that are extremely well documented, with the torrential rains, some of the worst rains in the last 70 or 80 years, causing massive flooding in many parts of China. You had the problems with the Three Gorges Dam. You've had droughts in other parts of China. And then recently, you've had even the South China Morning Post come out with stories detailing the locust swarms in the southern parts of China. And those locust swarms, which are killing enormous acreage of staple crops, are now moving north. So China has had to import an enormous amount of staple crops for food, and also meat and livestock in just the last couple months to try to offset some of this. So if they're importing a lot more food than usual, you would think that they probably wouldn't be running enormous trade surpluses, that they might be running trade deficits. So there is, like I said, a discrepancy here between what Joshua Philipp reported from internal Chinese Communist Party documents, where they were in Mandarin arguing about the lack of foreign exchange reserves, how it's gotten down to, I think, $1 trillion net. Meanwhile, the public, what they're telling the public with Chinese state-run media, and Western media is repeating this, is that reserves are exploding in size and trade in the Chinese economy are doing well. So both cannot be true. So one of those two is very, very wrong. I'll leave you to decide which one of those that is. But Kyle Bass, hedge fund manager Kyle Bass, has been predicting problems with the Chinese banking system. Also, he's been tweeting out problems as collateral damage, with HSBC Bank and Standard Chartered Bank, and that's also related to, not only do those two large banks have enormous amounts of their business in Asia and mainland China and Hong Kong, but they also dropped a dime. They handed over evidence to the U.S. Department of Justice against Huawei. So they have enormous exposure to the Chinese economy, to Hong Kong real estate, to mainland Chinese real estate, and potentially bad loans there. But HSBC Bank has enormous and very powerful political enemies. So this story, the reason I wanted to get this live stream show done late, and I'm not feeling well, I've been feeling pretty bad all day, is this Financial Times article that Michael Pettis put the link out to, China banks yuan taking a yuan for the team. So this article came out on September 8th. For some reason, I can see it right now. It's not behind the Financial Times paywall. I don't know why. I can actually read the article. Normally, it would be behind the paywall. Probably if I put the link below the video in the information and description section, you won't be able to read the article unless you're a paying customer. Anyways, it says there is one simple way to reduce a bank's bad loans, change how they are defined. Beijing has followed this path, encouraging lenders to go on propping up China's slowing economy. So one of the main reasons why China hasn't collapsed is because they have a closed system. So they just do enormous amounts of bailouts. They change the accounting rules, and other China experts, whether that's Kyle Bass or the guy from China Beige Book, Leland Miller, or Brian McCarthy, who I interviewed earlier this year, is they move capital, liquidity, bailouts from one part of the economy to another, back and forth, like a wave. So they try to plug holes in the boat, and that's how they're able to prevent the economy from having massive problems, even when there's a big failure with dollar-denominated debt or other problems. So Beijing has followed this path, encouraging lenders to go on propping up China's slowing economy, but the banks cannot hide weakening profits from investors so easily. Bad loan ratios have been growing amid the pandemic. The government has allowed lenders to delay recognition of some non-performing loans. Even then, Chinese banks are expected to rack up about 497 billion of non-performing loans this year, an almost 50% increase. The country's biggest banks are therefore in deteriorating financial health, and yet they are going to be asked still to do $210 billion, according to China expert Michael Pettis, who has been living in China for over a decade worth of bailouts. So you know things are bad when the large Chinese state-owned enterprise banks, who are not doing as well as they were even a couple years ago, are being asked to do bailouts still. And last year, China Construction Bank, which is the second largest bank to ICBC, and they were asked to start doing bailouts for Hunan province of around $300 billion over a 5-year period. Earlier this year, Beijing, and also in 2019, if you go and look at that video, and I'll try to put it at the end, because I spent about 10 hours putting together that video last year in August of 2019. It took me about 10 hours of getting all the articles, the screenshots, the audio, the editing, putting it all together. There was bailouts of China's new type of social security, so their pension plans, governments. There was about $200 billion, I think, in IOUs of government workers who hadn't been paid. Earlier this year, Beijing called on financial... So this was all happening in early 2019 to the Chinese economy, way before the pandemic. Earlier this year, Beijing called on financial giants including Industrial and Commercial Bank of China, which is normally known as ICBC, China Construction Bank, which is the second largest state-owned enterprise bank in China, Agricultural Bank of China, and Bank of China to lend aggressively to businesses. Outstanding domestic loans at financial institutions rose 13% to $24 trillion in the first half. Remember, the Chinese banking system has exploded in size in the last 10 to 12 years. The Chinese banking system, if you don't count the over-the-counter derivatives market in terms of just loans and credit issuance, the Chinese banking system is actually over 2 times the size of the U.S. banking system now. And the Chinese banks are also playing in the derivatives market. There was a lot of rumors. I heard from a China hedge fund manager, it was not Kyle Bass, but another China hedge fund manager I speak to, that the Bank of China, which had a lot of customers that were trading on margin with oil futures contracts when the oil prices went negative in, April? That the Bank of China had around $100 billion worth of over-the-counter derivatives losses in the in over-the-counter derivatives market for oil derivatives when the oil price went negative. Okay, so 24 trillion first half. Pace of loan growth expected to rise sharply in the second half. That growth will not translate into higher profits. The loans will include a larger portion of easier financing for riskier small businesses, which before the pandemic was largely covered by smaller regional banks. Kyle Bass also in July, he was tweeting that China's bank runs have begun on July 15th, at precisely the time when Chinese banks need any and all cash flow to pay for severe loan losses. The State Council demands that 1.5 trillion RMB, or about 75% of the 2019 banking profits from banks, are supposed to help the economy. Another tweet that was right after this one on July 15th. This enormous grabbing of what some are supposed to be independent publicly traded companies in China is exactly what any fiduciary should have legal problems with in the future. How does one invest in a bank stock where the Chinese Communist Party regime can take profits away, quote, for the good of China? The Chinese Communist Party is also getting a lot of the dividends from these large Chinese state-owned enterprise banks, which are listed on the Hong Kong Stock Exchange. And then finally, let's see here. Did I skip? Okay, let's see. Okay, these bank runs, this was from July 15th again. This is his third tweet out of 4. These bank runs are happening for logical reasons. Number 1, many rural Chinese banks are insolvent and begging Beijing for money. Number 2, Chinese regulators is warning of sharp rise in bad loans and capital shortages. Number 3, the regulator is limiting withdrawals of, quote, large amounts of capital out of the banks, adding panic. And number 4, this is his last tweet of the thread from July 15th. Interbank lenders got crushed in Baoshan Bank's collapse in May of 2019, which I thought was the precursor. I thought it was the tip of the iceberg back then. Some people thought I was way overblowing it, but the research I was doing from the warnings from Chinese banking regulators that were coming out months before Baoshan Bank happened in May 2019. And by the way, they finally just, I think in the last 6 weeks or so, they finally just allowed Baoshan Bank to declare bankruptcy. So they had done some type of bailout, and they were saying that I think the People's Bank of China was going to absorb it. And then there was other weird bailouts where China's sovereign wealth funds were asked to buy some of the banks after other banks were starting to potentially go fail, after Baoshan Bank, Bank of Jinzhou, Hongfeng Bank, and a couple, like 3 or 4 other small and medium-sized banks that became public. And then I think they just covered the whole thing up because they just stopped reporting which ones, which specific banks started to fail after the pattern started to be detected by the West. Baoshan Bank's collapse of rural interbank funding is increasingly difficult to arrange. So interbank lenders got crushed in Baoshan Bank's collapse in May 2019. I'm filling in the blanks here for part of Kyle Bass's tweet. So rural interbank funding is increasingly difficult to arrange. In the end, the only, quote, safe banks in China are the big state-owned enterprise banks and the policy banks. The rest of the system will be playing whack-a-hole. I thought it was going to say whack-a-mole. Whack-a-hole. I don't know why he has hole capitalized, for years to come. And the collateral damage from that could potentially be, because the Chinese government does not like them, is HSBC Bank and Standard Chartered Bank. Okay, let me get back to this other article here. There's a few, there's some really good charts in here if you're a paying customer for the Financial Times. There's some really, really good charts about loan growth surging in the pandemic, which is probably not a good idea, but They're sacrificing profits to give out loans, so I guess they're bailouts. That growth will not translate into the loan growth will not translate into higher profits. The loans will include a larger portion of easier financing for riskier small businesses, which before the pandemic was largely covered by smaller regional banks. That has led to a sharp increase in loan loss provisions in the second quarter. In the case of Bank of China, provisions grew 97% in the 6 months to June. Coupled with falling net interest margins, the strain has started showing at China's top 4 banks, which account for more than 1/3 of the industry's total assets. Net profits fell more than a tenth in the first half of the year. And the non-performing loan chart that's in this article, there's no way it's accurate. It looks bad, but there's no way it's anything close to normal. Just like the American banks are lying too. Jim Chanos has talked about how the American banks are committing even more egregious accounting fraud, covering up the commercial real estate bubble that's going to burst in the next 6 to 12 months. He did a short interview in the last month or so on one of the financial networks, talking the specifics of the accounting fraud from a medium-sized New York commercial real estate bank that had not declared really any losses for commercial real estate yet. Low interest rates and government so it seems to be a common theme that the bankers, they benefit from stagflate and tax and lie, because the bankers get to change the accounting rules, and then the bankers commit fraud, and then sometimes the governments ask the bankers to buy their government debt, and then the bankers make all kinds of money leveraging that up, using the treasuries as collateral to go and bet on currencies or bonds or over-the-counter derivatives trades. And then if something goes bad, or if there's hundreds of billions or trillions in fraud, then the senior level banksters don't go to prison. The government wants banks to sacrifice $210 billion in profit. Low interest rates and government policy will ensure returns stay low. The Chinese Communist Party wants banks to sacrifice $210 billion in profits, almost 2/3 of the industry's total last year, to prop up the economy. Spending and industrial output were weaker than expected in July. Which is interesting, because if industrial output is slower, then why are all these industrial commodities like copper, it doesn't seem to be any real demand. So if the industrial output was weaker than expected in July, that adds to my thesis that a lot of the demand for these industrial commodities, especially copper and some of the industrial metals, was just stockpiling. It wasn't real demand. The slower China's recovery, the more slack banks will be expected to pick up. And they've been doing crazy types of bailouts that are larger and larger and larger for over a year now. Since Baoshan Bank and the other small and medium-sized banks started to fail. Investors at the far end of the chain from distressed small businesses can forget about decent payouts for months to come. So why hasn't China failed yet? Because inside the Chinese economy, they can print unlimited yuan or RMB, unlimited credit. And you're seeing the Chinese people start to really suffer now and complain with food price increases. And this has been happening for a long time, but the food price increases have been accelerating for over a year now. It started with the African swine flu, which I was reporting on my YouTube channel way ahead of other people. And now with the last 60 or so days, the food problems. Now, China's not running out of food. They can import food. Brazil will sell them lots of soybeans. Brazil will sell China lots of pork. But this will start to drive up the prices in probably other countries. Although probably not here in the United States. After talking to a U.S. farmer, sounds like the paper price manipulation of the agricultural commodities here in the U.S. is very, very high. And without a lot of subsidies, U.S. farmers would not be profitable. So U.S. farmers are getting U.S. farmers that are profitable are making their profits on subsidies and bailouts. Again, this is more government intervention, creating even more distortions. And the average person, Joe or Jane on Main Street, they're going to get shrinkflation. So I saw someone commenting who went to Costco, and he said that only the steak prices were up. Well, check the cost per unit, which means go and check the amount of goods for consumer staples or food that you're getting. Because I've been noticing this for a long time. There is a lot of shrinkflation. The amount of toilet paper, the amount of portion sizes for a lot of items at the grocery store, it goes down a lot. So the price might not change at all, or only a little bit, maybe a couple cents, 10 cents, 20 cents. but the amount of goods that you're getting for the price, it's dropping 20, 30, 40% over the last 10 years. It's dropped a lot. And hardly anyone actually measures the cost per unit. There is no professional out there. There's no consumer price index. There's no Bureau of Labor Statistics. There's no hedge fund manager on Wall Street that is tracking cost per unit change. How people are getting a lot less. But I am speaking to hedge fund managers who are starting to wake up, like Tavi Costa. He was talking about his grocery bill over the last year and a half, 2 years. He listens to the podcast, and a previous interview over the last year or so, he was talking about how his grocery bill is up a lot. And the same stuff is being bought. So even if the price does not go up at Costco, you might be getting a lot less. They just changed the packaging, or if it's like a bag of chips or something like that, if it's like a bag that's air sealed, they just put more air in it. There's less food in it. Or they changed the packaging entirely. The average person does not check any of this. You have to understand what's going on with the shrinkflation, and you have to pay attention. And if you have some old goods stored up, someone messaged me that they had some old toilet paper rolls that were still in a package. They were airtight from a couple years ago, and he said that the weight of the toilet paper was down a lot in just the last couple years. I think it was from 5 years ago. So it's a lot less. So the packaging looks very similar. The weight, the amount of rolls, the amount of paper that you're actually getting is way less. Meanwhile, the price is probably up significantly over the last 5 or 6 years. I notice this a lot going to Target and Walmart and pharmacy, buying stuff at the pharmacy and grocery store. The prices are up a lot in the last 10 years. So people will be talking about deflation. Not the mainstream financial professionals will be talking about deflation nonstop. I don't know who pays their bills. They must be making so much money that they don't care if their bills go up. It must be nice to make so much money that you don't care if your bills are going up 8, 12, some of them 8, 12, 10, 15% per year or every couple years. So the Chinese Communist Party, the People's Bank of China, with the way their system is set up, with enormous capital controls and a closed capital account, they can play a lot of bailout games. So for those of you wondering why China doesn't collapse, that's also the same reason with the capital controls and the closed capital account why China does not want a gold standard and does not want gold leaving the country. Really, they don't want a lot of physical gold leaving the country. They might let you take some pandas, buy some pandas, some gold pandas at some high premiums, but they do not want a lot of physical gold leaving mainland China. Otherwise, that politician who's in the province, the guy had, this was last year. I'll wrap it up on this. The guy had, I think, he had 10 or 20 billion dollars in he had two separate vaults. So he had over 500 million in physical gold bullion in one of the vaults under his mansion, and then he had another $20 billion worth of printed US dollars in cash in a separate vault. And I was always thinking to myself, why didn't this Chinese politician, why didn't he just hire a couple hundred models and just melt the gold down into gold jewelry and just walk it across the border to Hong Kong? I was always wondering that, because you can make a movie about that. It was the great gold transfer, sneaking it out. You can make a movie about sneaking the gold, $500 million worth of physical gold, hiring all these beautiful Chinese models and having them smuggle the gold out of China, because money laundering from the mainland China to Hong Kong is extremely common. There is, for some, Kyle Bass and others have talked about this, for massive amounts of money laundering, there's a 40% fee to get it from mainland China out through Hong Kong and into another currency. Okay, well, that's it for this short live stream show. So to wrap things up really quick, I explained why China has not collapsed yet, because their system is closed. They want capital investment, foreign direct investment, so the American retirement savings, European retirement savings going into China, and they do not want it leaving. And they want to import lots of raw materials and commodities. And they do not want capital leaving. And then the way their financial system is set up, they can move liquidity for bailouts. They can move it from one part of their economy to another very quick. And they can also, because it's a closed system and the People's Bank of China defends the international foreign exchange rate, Tavi Costa has disclosed, hedge fund manager Tavi Costa has disclosed that on currency trading, when he was shorting the Chinese yuan, that he was told by his foreign exchange broker that the counterparty in the other side of the trade was the central bank. Please tell me any other examples of when that's happening. I've never heard that one before, where you're trading against a very large central bank, that's your counterparty. I've never heard that one before. So those are the types of games that they can play to do bailouts and prevent their current and maintain their currency exchange rate and prevent their economy from having the problems that people rationally think that should happen. Plus, the Chinese people, I mean, can they really actually complain too much? I mean, if they complain too much on Chinese social media, they can get in trouble. If they protest in public, they can get beaten or get in trouble or get sent to re-education camps. If they complain too much about food prices increasing or protest about rent. So there's not the traditional ability for them to have freedom of speech like here at least limited freedom of speech like here in the US, although social media censorship. We'll see if this video actually gets demonetized or not. Okay, well, this show has run too long. I will put other China articles in the information and description section if you want to take a look at the tweets. I also recommend following Kyle Bass on Twitter. That is at letter J as in Jason, and then his name, Kyle Bass. So he posts a lot of China articles and commentary for free on his Twitter. And then Michael Pettis, I'll also put Michael Pettis' tweet below the video too. Oh, and one last thing. I want to thank Daniel Ashley very much for the $20 super chat. So he says, don't forget to upvote. We have almost 300 people watching the live stream show right now. So thank you very much, Daniel, for the super chat. I appreciate it. I think he is one of my over 1,000 Patreon account contributors per month. There is a lot of content behind the paywall. I have to try to get something out in the next couple days. Again, I've not been feeling well Thursday. I was not feeling well at all today, and I just tried to crank this out. So I will try to put that extensive video at the end of this, the extensive video that I did about all the different bailouts China was doing way before the pandemic in 2019 at the end of this video. But if you want to look up that on the archives of my channel, that is, quote, China's very dangerous fiat currency and credit situation, about all the different crazy bailouts that China was doing many months before the pandemic, when the problems in their banking system became public in May of 2019 and then accelerated in May, June, July of 2019 before we stopped getting notice of which banks were having problems. So thank you very much to Daniel for the super chat, and thank you very much to my Patreon account contributors. I really appreciate it.